The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks. Welcome to an exciting day in trading. So, any of y'all out there, I'm sure y'all been focusing on the market and watching as this much anticipated Fed funds announcement and QE announcement has come out. And as expected, they are extending the Fed funds rate out to 2015. They're actually extending it to mid-2015. So definitely, interesting right there. Some, facts to check out. And there's a lot of different news coming out right now. Everybody's analyzing, of course, the Federal Reserve announcement and what that means and how that will affect everything. You can also go over to the Federal Reserve's website. You can see the announcement. You can actually read it for yourself and see what they said. Basically, they said they're going to buy $40 billion in mortgage securities a month, which is insane. And so let me see if I can pull that up, and I'll show you. Let's see here. We got federalreserve.gov. And so we can go right here. And, of course, the conference coming out at 2:15 Eastern Time. So where Fibonacci is going to be talking about everything and what's going on with that and what that means. And right here, if you on the home page there, if you click on Federal Reserve Issues FOMC Statement, you can actually read the exact details of the statement itself. So that way, it's always good to, of course, there's going to be all the talking heads and everything, on MSNBC and everywhere else. But it's always good to actually read the announcement itself. So let's go ahead and look at it and just, what that means. So information has been received, basically came in, and looking at the August economic activity, they said that, some things have expanded at a moderate pace, but, however, growth in employment has been very slow. And the unemployment rate, of course, remains elevated. And housing, however, has continued to advance. But fixed, investments appear to have slowed down. The housing sector has shown signs of improvement, in the midst of a depressed level. And inflation has been subdued, meaning the dollar has got, has got a little stronger, okay? Or really, I guess, weaker. So, but, hasn't been, what they say has been, over the top. So, therefore, that gives them the right to go in and print more money. And they said they think that longer-term inflation will continue to remain stable. Well, if everybody's printing consistently, the EU's looking at printing, then that, of course, is going to help us print and helps everybody stay in check. And, if you continue to look at everything on here, the committee is, their goal, they have two goals. One is price or really inflation stability. The other one is employment, even though, of course, buying mortgage-backed securities is not really going to help with employment. But they basically said that without them doing further accommodation, hence easing, that basically they don't think that labor market unemployment will get better. Okay? And Bernanke is basically setting himself up to do as good of a job on the market as possible, making the market rise. So that way, if he does get fired if Romney gets elected, then whenever it does fall apart, inflation does go through the roof, then he is not the one to blame for it because he no longer is on the job. And this movement definitely be one that Romney would not approve of. So, but, yeah, probably no matter who wins. But either way, Ben wants to get out. So it's one of those things, get out while you're ahead. Sort of like a Jordan, after you've won so many rings, it's time to retire. And so, he's won enough rings, and it's time for him to retire. He gets out of the way while he's on top. Whatever happens after that, not him. Getting fired is even better because then it's not even him choosing to do it. So, again, they think that, inflation will remain at 2%. Of course, they are not looking at what we're paying for food and energy on a daily basis when they take that number into account. So, being the one consumable you need to have heat and food is not even part of their consideration. So they're like, hey, you know what? We need to support this. We need to do as much as we can. So we're going to go ahead and buy $40 billion a month worth of mortgage-backed securities. and they're going to do it through the end of the year, and they'll extend the average holdings on the securities like they announced in June, and they're going to maintain their existing policy of reinvesting principal payments on the mortgage-backed securities. So this basically what it's going to do is their holdings are going to increase to about $95 billion each month through the end of the year, and they think that should put downward pressure on longer-term interest rates, because the whole reason that people can't get loans is because they're not buying enough mortgage-backed securities. It has nothing to do with the fact that Congress is in the way. I don't care what side you're on, Congress is in the way. And until companies and individuals have confidence that the market is the market versus, what's going to happen with fiscal cliffs and debt ceilings and taxes and healthcare and everything else, until that's resolved and people can start actually planning for the future, because right now they can't plan because they don't have control of those events, it's not going to get better. Buy all the securities you want. So, anyway, so all that's going to go in there, and yeah, definitely expect your food and your gas to rise. Because they're decreasing the value of the dollar, therefore by doing so, oil costs more, therefore gas costs more. And of course, I'm sure they'll blame it on the speculators. No way it could be the Fed's fault. So they're going to keep monitoring economic conditions, and if it doesn't improve substantially, they'll continue to buy mortgage-backed securities, and they'll buy even more asset purchases if they need to. They'll employ, whatever policy tools at their avail until they are able to achieve what they think is good price stability, which means that you're paying $10 a gallon for gas, but only 2% inflation, and in determining the size and pace and composition of their asset purchases. So, it's just interesting, and they go out to say that they're going to keep it at exceptionally low levels until mid-2015. Why do they keep it at low levels? People aren't going to go out and take out loans because of low levels, okay? The banks aren't loaning. That's the bottom line. It has nothing to do with the Fed's low levels, all right? The reason they do the low levels is to try to force you and everybody else out there to go in and put your money in riskier assets, because basically with their fake 2% inflation number, which is really much more than that, just look at the price of gold. Okay, there's your inflation. But they say, well, we don't have anything to do with that. Well, you have everything to do with that. Look at the announcement. Look at what just happened to gold. Gold flew up based on that announcement. So, yeah, they have everything to do with gold. And they have everything to do with the dollar. But going in and looking at that, they leave it low so that way people basically, it becomes too painful to take the losses from inflation that they have to put their money in different assets, such as stocks, gold, the market, whatever. And gold just continues to rise. I mean, it's still pushing new highs. So, good job on them on that. And I did not expect them to come back in and just, add a whole nother round of asset-backed purchases. But that's why I straddle on these announcements. Because in my opinion, as good as it is, whatever, doesn't matter at the end of the day. It's what they decide to do. And how can I set myself up to have the lowest risk and highest potential profit reward on any given day, on any given trade that's out there. And the gold trades put on actually did really well, and put those on for the announcement. Wish I would have put them on a few minutes sooner. Would have got actually worked out really well for the long side. Short side, wish I would have put them a little bit later. I did add some more on just in case gold decides to fall back down. But I don't really see that one happening here in the next 15 minutes before the gold market closes. So, but those long gold did really well. They covered, of course, the losses on the short side and then some. And so, definitely like to straddle things as much as I can. And if you don't have a native account, hop on TFNN.com, go over and click on the Nadex banner. And on it, click on Create Account. And you can see what I'm talking about when I'm talking about these binaries and these spreads. And click on the either the Start to open a live account. It's only $100 to fund it. You can start trading. We place trades today, $5, $10, $25, per trade. So you can easily trade with $100 in your account. And, obviously, the more the better, because you don't feel the hit as hard in that process. But you may want to go in and also open a demo account. I highly suggest you open a demo account. Demo account takes about 15 seconds to open. You put in your username, first name, last name, phone number, email address, hit submit, and then they will send you a password and your email in a matter of seconds, and you can start trading these binaries and bull spreads. You can do these straddles and different things like that. So now the big thing, okay, the big thing. I mean, this is QE3, okay? So if you're wondering, does that mean QE3? Yes, it means QE3. We still have the press conference, okay? So the press conference is still coming up. That has obviously not happened yet. And so you want to be definitely, getting ready for additional trades based on whatever comes out of that man's mouth at 1:15, 2:15 Eastern. And you can see more movement in gold. If you're trading on Nadex, you can hop over on the euro dollar to take advantage of that. You can look at the market to take advantage of that to get you just more details of what they're planning on doing. And the currencies will continue to trade till 3 o'clock. And the markets themselves will continue to trade till 4:15. So on the Nadex exchange. And but definitely go there, check that out, sign up, get access to a demo account so you can start playing with that today. And let's go ahead and do a market wrap just on where everything is, like I like to do at the beginning of every hour on this show. And so let me go ahead and we got some numbers to report here, right? We got the S&P up about 10 points. We got the Russell up about 10 points. We got the NASDAQ up 24 and the Dow up 75. We got copper almost up a 1%, 0.032, and we got gold up $34. It's a $3,400 move, okay, on one contract. It's a 2% move on gold. We got silver is up 3.78%, okay? $1.24 on silver. That's just insane. So you thought gold was moving. Silver, now that's a contract that's moving, okay? And, so there's all sorts of plays. You can also trade silver at Nadex. So, huge move in silver. And looking over at natural gas, it is dropping. It is down 2.3%, down 0.072 there. And you got oil is up $1, so up 1% on the day. You got corn up $4.50, which is about 0.5%. Soybeans actually staying pretty flat in the midst of all this. Not a big surprise. Everybody's focused on things like financials, and they're not really focused on ags at the moment. Let's look over at the currencies. So we got the Aussie is up 59 pips on the day from yesterday's close. We got the euro up 43 pips, and we got the pound up just a mere 15 pips. So not near as much excitement over there on the pound. And I was expecting the pound to possibly be a little bit down from the 11 o'clock Eastern time frame. So we'll see if that ends up here at 3 o'clock. If it does close down, had a short binary in on that. And, we can look over at the Canadian. It's up 56 pips. The yen is up basically 5. So it's not even moving that much at all. But anyways, hold on right there. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome on back here to the Diagnostic Trading Hour. So, let's say you still wanted to buy gold even though it has already moved so far. And you go over and you look at Nadex, and you quickly see there really is not a good option for you, okay? So you're trying to figure out what to do and, how to do it. So let me pull up my Nadex account, and let's see here. We'll pull this up, put this on the screen for you. And, yeah, still have the short one on there. Long one's already filled, taken profit, and done. All right, so anyway, the US 500 trade that was on there. And so checking this out, we're going over, and what we're going to do is we're going to look at the gold spreads, okay? So you go in, and you go to commodities, bull spreads, you go to gold, and you go over here, and you're like, I do want to buy gold, but man, I don't know, dude, it's really high, okay? So, and you go to look at them, and you want to get something as close as possible with the floor. Let's see here, let's do that one's expired out. With a floor of 1770, we got a 1730, a 1710, and a 1690. That isn't going to do any good. And you got 1750. That's still 20 points away. That's a big, big difference. And that one obviously isn't going to work. So how can you do it? What we're going to do is we're going to combine a few different spreads together and show you how to have a low-risk trade. Okay? So check this out. What we're going to do is we're going to buy the Master Gold Spread. And that's going to bring up some stuff for you right there, which will allow you to see, okay, well, obviously there's a lot of risk, And, so a decent reward still. You got still 20 points. That's still a couple grand in reward if you do 10 contracts. But I don't like the risk. That's like a $7,000 risk. So how do we get rid of that? What we're going to do is we're going to sell a couple spreads also. So the market's right around 1770, so we're going to sell that one. Okay. Now, if you want to, all right, and that one's only like at $9. Okay, so that gives you a hedge right there for $9. And then, maybe you want to hedge it all the way down. If you did want to hedge it all the way down, then you could go over here and you could do like the 1700 to 1750, or even the 1730 to 1690. Probably actually would be your cheaper option. So it'd be a better option because it gives you a little chance to make some money if gold did some insane reversal out of nowhere. That trade right there gives you the ability to have a very, very low risk. But what is the actual risk on my trade? Well, the actual risk on your trade is going to be where you buy. Okay, so we buy at 1772.3, and then where you sell the one that's closer. Okay, that's 1770. So minus 1769.5. That gives me a 2.8, basically a 2.8 risk. So I have that. Now I have one other option also. Okay. And I can go over and I can look at, there is a 1775 right here. I go, okay, well, what could I get that one for? Would my risk be lower if I did this? Okay. So, and to show you that graph, basically looks the same. All right. So let's check out the risk on that. Again, I buy at 1774.2, and I'm going to sell this one right here, minus 1773.3. That's only 0.9. So by putting those two together, I'm literally going to be risking less than, okay, $90. Not too bad. Or $9 on that spread total. $90 if I did 10 of the spreads. So a very, very, very cool trade. A way to combine two spreads to make your own synthetic strike. And I just wanted to bring that example up. Gold had moved so far there was not a good spread, so I want to show you a way to make your own synthetic spread. And again, it's just basically buy like the master spread and then sell another spread that's really close to where the strike is, where the ceiling's there, and you make a synthetic spread. So sort of a cool way to take advantage of the market. There's a lot of different things you can do to take advantage of, spreads on Nadex. So now let's go over here and we'll check out other markets and see what's available, because gold is getting ready to shut on down. So the next markets, let's check out, we got currencies, and we can see what's available on those. So looking at like the euro dollar, okay? And currencies really have been sort of a surprising move in how they've been reacting to everything. But we got gold. Obviously, we know that thing went through the roof today. But we can go on here, and sort of a lesson learned is the announcement was coming out at 11:30, and 11:10 there was this massive drop, and it didn't look big in comparison, but still a 5-point drop. And I mean, this wasn't a drop in a matter of like minutes. It was in a second. It was just bam, it was down. And so when you're going to do trading. My own lesson for you is put your trade on at least 25 to 30 minutes before the Fed funds announcement. Hold on right there. We'll be right back after the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. And euro dollar is definitely moving up, down, up, down. It had more volatility than just about anything today. And not so much just, I mean, obviously the gold is just taking off and with this massive move. But, you know, I'm just talking about as far as like just this massive up and down. And check this out. We got euro dollar like right before the announcement here over here at 28.86 and moving up to basically 29.61. So like 80 pips up in a matter of like no time at all. Okay. And basically it shoots down and shoots back up, shoots all the way back down. All right. And then literally has just now climbed, just now, keep that in mind, climbed all the way back up. So why do I highlight the just now? Well, there's probably a good chance there's a deviation level there. So let me pull those deviation levels up and let's see exactly where we stand on that, okay? And because you definitely want to be always in mind of the deviation levels. And let's see here. So got these all set up here. And looking at euro dollar, it moved up to 29.67. 7. So, yeah, 29.72. Okay? I mean, you're talking 5 pips. All right? One deviation move on euro dollar. It went up to that move right off of the announcement and fell back down and went right back up to it and stopped and is turning back around. So basically that's the expectation of move. That's what the market expected the euro dollar to do today, and it did it. All right? So this is not necessarily the time, not that you couldn't go in, but if you're going to go in, you better go in with some low risk. Not necessarily the time just to jump in. Okay, this is the time to be taking some profits if you were able to catch this move up. All right? So hope you're able to catch some of that, but just keep that in mind. And we can go over, but we should expect it to do a bit of a pullback now. Same thing on pound dollar. Pound dollar flew down, flew up, flew on back up. Let's see here. Let's see, pound dollar. We're looking at a 61.69. So pretty close there, 61.57. So 12 pips off on that one, but pretty close on its maximum move. And it stretched out there, and you can sort of see if you zoom in a little bit, sort of like where it stopped and hesitated, and then pulled back, and sort of where it stopped and hesitated that first time. That's pretty much where it went up to, right here. And that's 61.47, and our 0.7 level, which is the area that I'm always looking to start taking profits, and I'm definitely taking at 1 level. But around 0.5, I'm looking to tighten stops a little bit. 0.7, I'm definitely tightening stops. At 1, I'm taking a good chunk of profits. And the 0.7 level on that was 1.6150. Okay? And you can see how it started pulling right back after that. So definitely, you want to be tightening your stops. And based on just the movement this morning, I'm going to probably be looking at taking some profits off the table on any long euro-dollar trades that you may, or pound dollar trades that you may have on. And we go over and we check out a few of our indexes. So we got the S&P over here, and shot up, shot down, shot up, just kept trailing on up. So it's like the longer the people read it, the more they're buying. And looking over at the S&P right now, it's at 1455. Well, 1452 is one deviation, really 1453. So right there, 1452, 1453 is one deviation level, which would be right here. Okay? So, and it just sort of went flat at that point. So it sort of basically broke the deviation and just chilled out. So we probably got our move. All right? I know it's like so exciting. Probably got our move. Now, the only thing left that could affect all of this, all right, is the press conference. The press conference could make it worse or better. If it makes it better, it could go a whole another deviation move. Just depending upon how all that works out. And so there's some plays, different ways you can set that up. And then let's check out the Russell. So we got our small caps going on, Russell 2000 Index, TF. And let's see here, 856.96, so basically 854. So this is actually a deviation level, and it started breaking through it pretty good. And for it to move any further, it'd have to go 67 would actually, so it only got 7 points away. But which is still, of course, a big move. It's a pretty big move in the Russell. But it's already moved 12 for the day. But yeah, 854. So basically, you can tell it did hesitate there. So it popped up, came back down to that deviation. I started using it as a trend line or as a support line. And but it also has chilled out along with the other markets. And then looking over, let's check out the Dow. On the Dow, what do we got going on? Now remember, the Dow, we got the seasonal cycle that kicked in today, goes in tomorrow. We'll see a little impact on that on Monday. And that cycle is the payroll cycle. People getting paid on the 15th, which means tomorrow, because Saturday is the 15th. And people get paid on Fridays. People get paid, money comes out of their check, goes into their 401k, goes into mutual funds, and goes into stocks on autopilot. And that, basically, that cycle, first few days of the month, the middle of the month, has contributed to, you can actually get all of the gains in the Dow, minus maybe 1 or 2%, depending upon what years you choose, all right, from just those few days. So, this day and tomorrow have that payroll cycle working in their favor. But hopping on over here, let's see what we got on deviation levels. We got to move all the way up to an astounding 13,496 with a 127-point move. And on the Dow, 13,473. So right about here is your deviation. Busted past a little bit and then just chilled. So this is definitely a take profit level on the Dow. or at least a tightened stop if you're waiting on that news announcement to see if it spurs more activity on. I'm sure it's going to be a little bit volatile, though, so you could easily get stopped out, unless, of course, you're doing something like Nadex. And then we can go over here, we can check out copper. And copper, of course, the market is closed, but it's still going there. And it moved like crazy. And a move on copper, let's see, 3.747 is one deviation. It moved 3.7465. So, right on the money. And again, these are not standard deviations. These are implied deviations, or what I like to call diagnostic deviations, where I extract the implied volatility out of the market of the underlying option, so I can let the market tell me how far the market is going to move, versus history trying to tell me how far the market's going to move. And these numbers change every day based on just option volatility. And let's see here, gold. We already checked that one out. So it actually is at the 2 standard deviation level. 1775.4 was the second deviation level on gold. So a reversal on that, not a big surprise. Okay. So it broke through 1 standard deviation. That 1 standard deviation was at 1754, which is right here. And check it out. It hit it. What did it do? Fell, came back up, fell, came back up, and then when it broke it, went to level 2, and fell. So definitely would be taking profits on gold if you're still in. Bravo if you were able to ride that one all the way through. And then checking out silver. So what we got going on silver. Silver right now is at 34.87 on the high. And looks like we got a 34.81 is a 2 standard deviation. Hit the second level, fell back down. And what was the first level? Let's check that out. First level was 34.05. So right about here. Right there. So you can see it basically popped up, and that's where it really hesitated and came back again. Hesitated, basically did some work right there before it went ahead and went on up, hit that second level, and is now on its way back down. And so we can go over, we can check out natural gas. And how's natural gas? Natural gas has been falling like crazy today. And out of all the markets to be falling, it's sort of interesting. But natural gas going down, I haven't really kept up on the news on it. And just with the, everything else that's been going on. But I'm sure that has to do with the inventory reports. Inventory reports worth that off. They came in at 27 billion. They actually came in a little better. But that's more supply. So more supply than expected. They thought there was going to be 26 billion, British thermal units, whatever, in store. And there were 27 billion in storage. So came in a little better, more supply, therefore lower price. But anyways, that's not a massive difference compared to what the differences can be. But looking over at natural gas and how that's been playing out right now, let's see here. We got natural gas, and it has made a low of 2.96, and we got a low over here 2.946. Actually, would have been 1 deviation, so it didn't even move a full deviation, even with that massive move. That's crazy. So that's how much option premium is built into natural gas right now. That it was able to actually go that far, but and still not hit its deviation level. But 2.981. Okay, so right here was the 0.7 deviation level, and so it sort of played that level quite a bit. You can see basically all day. You could sort of draw that. I mean, obviously this would be your solid support one, but this would be your really consistent one where you see a lot of price action happening right around 2.8 there. And so its move is probably over for the day. And then let's check out oil. All right, on the oil side, looking at the CL instead of the WTI. But so looking at CL right now, light sweet crude oil futures. The reason following CL is because Nadex contracts follow CL. And if you're in the Tiger's Den, you know what that's all about. But anyways, checking out 97.01, and looks like the market went up to 98.58. And we had a deviation at 98.64. So, I mean, literally like 1 full deviation. So we were just, not bad. 6 ticks off of, hitting the full level there. And it moved down to 96.50. How far down would that have taken us? What level? 96.50. Well, we had a deviation down to, well, that doesn't even take us down to a deviation. So basically off the close there. So it really, it's pretty close there. Like, didn't go down deviation because the deviation is based on the previous day's close, which is right at 98.96. So really didn't move that much down from the day, but no surprise on the reversal being at a 1 deviation level. And then let's go in and check out ZC. So on ZC, on corn futures there. And what do we got going on? We got a move, pretty decent move going on, but nothing, really just honestly nothing to write home about. Wouldn't even be playing in there today. So it's just way too choppy. And we go over look at Aussie dollar. And the Aussie dollar is moving. And it's all the way to 1.0541. So we got the Aussie dollar up at 1.0541. That's actually broken through 520. This was the deviation level right here, sort of where it stopped, fell back, came back, and it's moving. Looks like it wants to go to the second level. So if it does that, it's going to move on up to 1.0577. So there is still about 30 pips of room in there. I definitely have some tight stops on already, at least. I'd say if I had a stop on right now, I'd be looking at around 25, 26. So 526 or whatever on Aussie dollar there. And euro on the deviations, we got that, and that has moved up. We talked about this one a little bit earlier, but 29.67 and 29.50 was 0.5, 29.72. So it's right on that level. Basically, everything's hinging now on that press conference. So everything ought to be pretty quiet before that. And we can check out a couple of the other ones, and that'll sort of wrap up our statistics side of the day. And we got the U.S. franc dollar, of course, getting hammered because we're printing. So, anyways, 0.09365. And that puts us down 0.09353. That's really not a big move on the downside, from yesterday's close. So it already had the move down and then sort of, did a pull back. Let's see here. What about the upside? 0.9418. And we got 0.9411. It stayed relatively quiet. So there's our statistical wrap-up on the Diagnostic Trading Hour. There we like to go in and look at, are things staying within their ranges, their expected deviations. Again, not their standard deviations. And, how can we best, play that? And so there's a lot of ways to play that, but definitely whenever you see that deviations like the ones we went over, those are places where you go short. Or that's where you sell like an at-the-money binary. Or that's where, possibly you look at buying a little, maybe selling an out-of-the-money binary that's not too far away, or straddling at that point because you expect it to make a little bit of a move off of that level. So, if you have any questions about that, definitely one of the things you want to know is that you can always give us a call. You can give me a call. You can give any of our hosts a call. And we got 8 hours of radio on here for you a day. I think maybe it's 9 hours a day now. And 1-877-927-6648. Again, that's 1-877-927-6648. If you're outside the U.S., you can call it 727-445-1044. And I want to remind you that we do have the Tiger Dollars. And you're basically at your last chance right now, okay? It expires on the 16th. Tiger Dollars, you go in, and this is for things on TFNN like newsletters, workshops, seminars, things like that, just all different products that we have. And that expires September 16th, and you can get 30%. So whatever you're getting, if you spend, let's say, $11.50, you can get an extra $350. But that offer does expire, but you get access to a 5-hour live trading workshop with Tommy if you go ahead and participate in any one of these levels, whichever one works best for you. Stay right there, folks. We'll be right back after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion shares connect sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So you've been hearing about all this stuff going on, and I want to make sure that you understand that we have a free, not cheap, but free, okay, live workshop, in-person workshop with dynamic trading strategies with Tom O'Brien and myself, and it's sponsored by Nadex. That's why it's free. It's coming up at the end of the month here, and right there. So you can go on over and you can go and click on it, and then it's free live workshop on the left side. It's going to be Saturday, September 29th, right there in Tampa, and you can see that it's going to be at the Grand Hyatt. If you do register, make sure you're going to attend. Space is limited. We expect it to be packed, and we don't want people to not get a seat because somebody registered and they weren't going to show. So if you're going to be in Tampa, you want to come out. It's only 3.5 hours long, 3.5 hours power-packed. Dan Cook's going to come out. He's going to do an introduction to Nadex. Tom O'Brien's going to go in and talk about identifying the trend. I'm going to come in and talk about diagnostic trading. and go over the basics of binaries and spreads and putting all of it together, and going into how I use my implied deviation levels and fundamentals, technicals, seasonals. And then Tom's going to go into setting up trades with some of his trade setups. And then we're going to come together and talk about how to combine the two together. How do we put the spreads and binaries with the trade setups and the trades that Tom O'Brien has set up? And we'll put the two together. So it'll be sort of a tag team there at the end. And then Dan Cook is going to wrap it up. So definitely highly suggest, if you can make it, please register. Register as soon as you can. We're going to take that down pretty soon once it's full. But just make sure you're going to be there if you do register. If anything comes up, let us know. But we're very, very excited about this event, and we think a lot of people have been asking for something that's Nadex focused, and so that's what we're doing. And if you want to check me out, if you're going to be out in the Vegas area, you go to the Forex Options Expo Vegas. Let's see here, and then you can see right there. So at moneyshow.com, and I am going to be speaking tomorrow. I'm heading out pretty much right after the show here. And you can listen in, and you can come in. You can meet me in person. We can talk and ask me any questions you want. And you'll be able to find me. Let's see, where is my picture on here somewhere? And there I am. All right. And so I'll be speaking from 12 to 1. And was it 12 to 1 or is it? It's 11 to 12. And I'll be going through my P3 trading formula on binary options and sort of how I use that to place trades every day. Anyways, I hope to see you there tomorrow. I hope to see you as well at the event at the end of the month. And, we'll have a lot more coming for you as well. And we'll be back in Vegas, I'm sure, here in November and then again in February. Now, if you have any questions, always feel free to call. You can also email me, dmartin@tfnn.com. And you can call in during the radio show. And I will see y'all soon. And let's do a quick final market wrap-up. We got the S&P is up 14 points. We got the Russell up 10. We got the NASDAQ up 30, and we got the Dow up 120. We got copper is still, nice big move. Gold is still up 36, and silver is up 1.34, which is a 4% move. Okay, massive move, 4% move in a day on silver. And looking over corn and soybeans, still basically flat. And on the currency side, you got the Auster up 78. We got the Euro up 67 pips. And we got the pound dollar is retracing back down. Now only up 30 pips. So we'll see if it ends down for the day. Stay tuned and stay on. We got more great shows coming your way. And got that press conference coming up, so make sure you're ready. So right around the corner here in about 15 minutes, I got to see some more market action going on. All right, I'll catch y'all next time. And stay right here. We got next show coming right up.